Taiwan seeing cuts of around 1.6%.
The Federal Reserve raising interest rates by 0.75 of a percentage point to a new range of 3 and 3.25%, the highest rate since early 2008.
The market's fear is that they did underestimate the rate hikes.
The Fed has delivered a third consecutive 75 basis point rate hike.
The Nifty is opening about 105 points lower.
It is not about the fundamental, it's not about the P, it's still the demand supply continues to be in favor of stocks being bought.
I think for markets, what it means that you will have rates going higher, more tightening coming through.
A lot of turbulence out there. And I was never trying to predict a hurricane. I was simply trying to explain to people that it could be a very modest storm.
Quite a historic day. For so long, the RBI had protected the 80 rupee to the dollar mark up until yesterday, as it were. And more hawkish than expected Fed has allowed the RBI to let the rupee breach that mark.
We have seen some recovery, and right now the Nifty is down just 58 points.
Good afternoon and welcome to Closing Bell. I am Anuj, with me Prashant and Nigel, and well, what can we say about this market? It's just extremely strong, and it's perhaps resilience personified. I mean, look at the kind of move that we have seen on the Nifty. Very sharp recovery. In fact, just about 5 minutes back, the Nifty had actually turned in the green as well. The mid-cap had been in the green for a better part of the day, and the market may have aced a big test today. That was the market's test in terms of whether that decoupling is intact or not. Regained all the lost ground. The broader market has done well since the word go. And one thing which really should excite the bulls is that it's not really the bank Nifty which led the market higher today. It's the others like FMCG, even IT. So that I think is something which is very interesting. As I said, the big question is the decoupling now sort of confirmed? By the way, the US futures are also surging. So let's see what happens in the US market. The only sour point is really what's happening with the currency market, because this is a big decline, almost 1% move in the currency market. So whether the market takes note of that at some point or not, but big moves and big recovery, Prashant, Nigel. Hi.
Oh, absolutely. I mean, we came back into the green, right?
Yes, yes.
And just there, 30 odd points lower, Nigel high. So yeah, I mean, it's following what everyone has become pretty attuned and used to, for the lack of a better word, which is the fact that whatever happens in the end, I mean, the market comes back up. And it, although at no point did it seem like a very large cut or anything, but even that has largely disappeared, and it's just, one push and you're back in the green. So flitting absolutely flat right now on the Nifty. The rupee is the more interesting of the two, asset markets. So there has been so much debate about whether now, because the Fed, which of course is absolutely without doubt very, very hawkish, it will send the dollar sharply higher. And is there any point in central banks like, for example, the RBI, to spend more of their dollars to try and defend this, or let it kind of run for a little bit and be more selective and more opportunistic? And I think that is basically what is playing out at this point in time. We get the Forex numbers at the end of the week, Fridays, so it'll be interesting to see what that number is for the week gone by. So 80.70 is where the dollar rupee rate is right now. Nigel.
Well, indeed, what an outperformance we've seen from our own markets when the global markets are a little bit jittery, and we are sitting with a cut of all of 20 points. Well, that's still the kind of strength that we've seen in our Indian markets. And the mid-cap index up closer on 0.3%, way more stocks advancing in comparison to the number of stocks that are declining. So looking pretty good in terms of the breadth of the markets. But we have to get through the final 60 minutes. Remember, it's weekly expiry that will play out as well. Before we get to all of that, first up, let's run you through all the top stories and what we have lined up on the show for you. The key indices, they're off the day's low, with the Nifty closing in on the 17,700 odd mark, while the sensex trades more or less flattish. The mid-cap, well, they consider their outperformance today. FMCG stocks trade higher. Financials drag and trade. The Supreme Court extends the stay on the long-awaited open offer to Fortis Healthcare shareholders by IHH. The move dashes hopes and dents the stock. A detailed analysis lined up on the show. And finally, we'll discuss the moves, the road ahead for our markets with Mithun Ashwath, Managing Partner at Kiva Advisors.
Excuse me. Well, let's start the show with last hour calls. Mitesh Thakkar is joining us for that. Mitesh, good afternoon. very strong recovery, especially on the Nifty. Your thoughts on how to approach it now and your stock calls?
Good afternoon, Anuj. I think you rightly put it, resilience personified. I think, amazing strength in the market, though I think we still aren't showing signs of breaking on the upside. But every time there's a dip, I think it gets aggressively bought into. So that's not a very bad sign. That's a very positive sign, in fact. And I think, that should help us in good stead. Eventually, I think we need to get past 850, 900 zone to suggest that, we could be preparing for a breakout on the upside. Till then, I think, we'll still be trading with stock-specific biases. I think pharma is clearly the key today. Apart from banking and IT, which you highlighted, a lot of pharma stocks are showing good breakouts. So Sun Pharma is one of them. That's a buy with a stop at 894. Look for targets of around 940 here. And the other one, which I like, is Torrent Pharma. That's also a stock, which is broken out. That's a buy with a stop just below 1515. And look for targets for around 1610 here.
Okay, all right. Mitesh, thank you very much. By the way, just before you go, Mitesh, any thoughts on Fortis? It cracked on the back of that Supreme Court decision, but it's a large cut, 14%. Where do supports, etc., come in, if any?
Prashant, one is the current level, which is the 200-day average area. That's the 266 level for the 200-day average area. Though the intraday low was much lower, but I think we might have a closing above this level and at least attempt a bounce back in the next 2 days. But in case we start closing below this, then I think you'll have to look at slightly longer-term support areas, and they will come, around the levels of 243 to about 240 on the downside.
Okay, all right, Mitesh, thanks a lot for that. We'll get you back on the show, to get a quick update as well in terms of the markets as well as individual stocks. Deven Choksi of KR Choksi joins us on the show. Well, Deven, we were just, discussing Fortis Healthcare. Root shock coming in today for shareholders. They were hoping for some kind of relief. That wasn't the case. What would you do now? The stock is down close to around 15%, plenty of uncertainty.
Hi, Nigel. Good afternoon. Certainly, I think we don't keep the track of this particular company, so we'll refrain from answering this question ahead.
Okay, all right. Deven, what's really done well has been the consumption theme. These FMCG names, they have been going from strength to strength. ITC, it seems the stock, got fed up of all those memes that were coming out. And it's been a big outperformer. In a year when the Nifty is up 2.5% and you have ITC giving you returns of 55%, it's making up for all the underperformance you've seen in the prior years. But what's your approach to the consumption theme? That's the FMCG stocks and ITC in particular.
So I think the larger amount of game is likely to get unfolded once we see, I think, relatively a sharper cool down in the commodity prices. That's what is expected, because I think tightening of by the Fed is resulting into definitely, I think, a reaction onto the commodity prices, and that will come down. Should the commodity prices come down, including in India, and in such situation, most of the consumption companies would have, I think, a good amount of relief as far as I think their raw material cost is concerned, and that includes likes of ITC, HUL, among others. So certainly, I think that is one expectation on which I think most of the stocks are looking promising. For say ITC, if you look at it, I think the company is reasonably strong on all parameters. I think around 25% kind of ROE, ROC that they have, and promises to go up to 27, 29% in coming years if this particular cost comes down. Along with that, I think unlocking of the valuation might end up taking place in some of the verticals which they have been operating successfully. And in the current year, apart from cigarette, I think you are likely to see higher amount of contribution also coming in from the verticals like hospitality business. So all in all put together, I think looks extremely promising. And probably, I think the market is giving the kind of a valuation advantage to this company, given the kind of potential that this company would have as far as unlocking of the value is concerned. So all these points working in favor for ITC in particular and in general for FMCG companies.
Okay, yes, ITC is done remarkably well. Deven, hi, good afternoon. The other stock which has moved up sharply over the last 1 month is Titan. Your views here?
So good afternoon, Anuj. I think as they say, I think ahead of Diwali, you buy gold and gold related activities, including I think the companies like Titan, which is likely to see higher amount of surge in the business because of the festive season going ahead. I think this festive season is happening after I think 2 years of lockdown. So this time around, I think it is expected that most of these companies would probably have higher amount of sales to talk about. In fact, I think we gather from the companies which are into the similar business, I think the kind of a outlook that they are carrying they basically believe that I think this festive season is going to probably unleash, I think, higher amount of growth for the business in general. And Titan, I think, definitely remains, I think, a premium brand in this particular category. Along with the festive season, I think the marriage season is also going to be opening up in this particular quarter, October to December and thereafter. So from all perspective, I see, I think, a higher amount of growth continuing. Of course, the valuation-wise, this company has always remained at premium, but I believe that the growth will be probably, I think, much sharper than what one has expected. So that's where I think the follow-up buying is happening in the markets.
Devin, we get Accenture numbers later and we'll put out a preview later, but is there any sense that may mark some kind of a trough for large cap IT? The Accenture results maybe act as a bit of a trigger in the near term?
So, Prashant, I believe that I think most of the IT companies are probably, I think right now, under fear they are coming down, the prices are coming down. For say, the business situation-wise, I think they are not negative. In most of the cases, I think they are talking about winning the new contracts as well. And that too, I think, giving a visibility of 5 to 7 years in some of the larger contracts. So all from the perspective of looking at this business, I think this is only going to grow. I don't see, I think, demand situation getting affected in IT, even though there is a tightening happening in the global market, as far as I think the funds are concerned. I think the demand situation remains extremely positive. In the near term, the headwinds continue to be, I think, the attrition and attrition related costs. But I would believe that to a certain extent, or to a larger extent, I think it would get compensated through the depreciated rupee, at least in the near term. So all in all put together, I don't see, I think, too much of a threat as far as IT company and their business conditions concerned. On the contrary, I consider that the current fall in the valuations and then price is demanding buy into IT companies, and probably I think one should be accumulating these companies into the portfolio in every fall.
Pick speed, Devin, if you believe that they've fallen enough and maybe majority of the bad news is in the price with limited downside from here, what would your picks be? Would you go for the large cap names? If yes, which would they be? Or do you believe that some of those mid caps, they're offering great value?
So Infi and TCS, I think among the large caps, definitely show a good amount of clarity, visibility from a 5 to 7 year perspective, largely because of the fact that most of these contracts, I think the large contracts that they won, they offer you a comfort level as far as I think the growth is concerned in coming 5 to 7 years. So that is one area where I think Infi and TCS would score maximum. And some of the niche players within the mid-cap IT companies like L&T Technologies or L&T Information Technologies and Mindtree, I think these kind of companies are niche play in different verticals in which they are operating. So I think would probably think that I think they have relatively better amount of growth numbers to talk about. Like so Tata and Axis similarly, I think in a similar position, or even Science Technology. So from a point of view of looking at, I think some of these companies in the mid caps, I think one will have to look at the niche play in those companies which I mentioned. Probably that gives you a higher amount of comfort to buy them into the portfolio.
Okay, the market's seeing another decline, by the way. The Nifty, which had turned the green, is now down 48 points once again, and the Bank Nifty has been extremely weak today. That index is now down 434 points. So Axis Bank is really the one which is quite weak. And in the last few minutes of trade, there's a couple of other names. Tech Mahindra has moved to low point of the day the last few minutes, and HDFC Twins, they have made a bit of a move towards the lows. So of course, we're still comfortably off the lowest point of the day, but still, some of these stocks are at higher levels, seeing some selling pressure as well. Devin, any word on HDFC Twins? I mean, they have underperformed now for better part of last 5 years.
Yes, I think, and maybe I think one of the reasons could be that I think they, HDFC Bank in particular, I think they could not catch up with the kind of digital play as much as I think they should have. As a result of which, I think they remain, I think, quite subdued as far as I think the growth in the business in the AUM is concerned. Of course, I think during the pandemic, I think they remain a little extra cautious in expanding the lending book. But having seen that particular situation, and probably looking at the kind of effort that the bank is making in form of adapting to the digital, technology platform, I would think that I think the growth from here onwards would be faster, not only faster, but also I think there would be, I think, efficiency in lending, which would probably bring down the cost for the bank. and I think their customers. So that is one point I think which goes in favor of HDFC Bank. Though I think last 3-5 years I think haven't been very rewarding for the investors. My take would be that the combined entity HDFC and HDFC Bank year after in next 4 years, 5 years have the potential to double the size of the EM to close to 50 lakh crores. And should that be the situation, then probably I think this particular bank at current levels remaining an attractive buy. Fortunately, I think it's available at a valuation which is not too far expensive. So I think one could possibly accumulate this stock in this kind of a period.
Okay, by the way, I just want to point out the big moves are happening in the global currency market. I mean, this is some kind of unprecedented moves. The dollar index, which an hour back was at 111.56, has seen a sharp dip to 110.56. I think we have a bit of a delayed rate, so I think that will correct. And that has happened because if you look at the mainly the dollar yen, this I think a very strong defense of that which has been launched. And I think I mean, just see the intraday chart of USD JPY. I think you will be amazed to see from 146 to 142. I mean, it was just running away. Big moves were happening in dollar yen. As I said, we have a slight delay in the rates, but from 146 it's collapsed to 142, and it looks like there's been a big BOJ intervention. So we are in some serious sort of global something which we haven't seen for a really long time.
Yeah, no, absolutely. I think the last time we saw, maybe 2018 briefly, but the bigger currency market moves happened in 2013. And before that, of course, I mean, there was a big panic during the global financial crisis, but nothing like what we've not seen this for a long time. Absolutely, Anuj. We'll take a quick break here. The market is down 45, so 17,672. We'll take that break. We'll be right back, and we discuss more on markets. We also will have we have Mithun Ashwath of Kiva Advisors join us on the other side for more market fundamental talk. Stay with us.
Well, the dips are getting bought into actually, because we dipped a little bit, but again, we had a bit of a pullback. And the last few minutes, Cipla has really been the outperformer from the pharma pack. I think, that's one of the stocks that's closer to around the 52-week high, if I'm not mistaken, in comparison to the other names. Yes, it's closer. It was at 52-week high yesterday. And maybe we'll pull up Cipla with the pharma pack, the pharma index year to date. And I think it should show a bit of an outperformance in comparison to what's going on there. But the sector that's really done well, Devin, has been the cement stocks. Now, the street is a little bit skittish, whether it's profit-taking, whether it's because the promoter entity has gone ahead, the Adani Group, and pledged all their shares in ACC and Ambuja Cements. But those stocks as well have come off the low point of the day. How would you approach this space? Do you believe that go in for these two names because they have a change of promoter entity? Or do you believe that these two entities, well, they're going to be on the prowl, they're going to be buying assets, so you go and play it the other way around? Maybe buy the India Cements of the world, the Sanghi Industries of the world, or maybe a Novoco as well. It'll be tricky. Case in point, Novoco, it was close to 500 rupees 2 sessions ago. Now it's hovering around the 420 rupees. Your take?
So Nigel, I think two ways to look at this particular subject. ACC Ambuja combined, of course, I think is likely to grow faster because of, I think, the larger amount of fund infusion by the promoters into the company. And not forgetting that I think they already carry the cash in the balance sheet of somewhere around 3,600, 700 crores as of last quarter. So I think that is one strong point as far as I think their growth is concerned. You may call it, I think, brownfield expansion, you may call it greenfield, or at the same time inorganic growth as well, I think which could happen. But most importantly, SEC Ambuja combined, I think, would have a few other advantages as I see it. I think it is related to cost. Largely because of the fact that I think Adani is basically leveraging their infrastructure play, including I think the mining of coal and I think bringing it from the overseas offshores into the port, I think they would probably be in a much better position to bring down the cost of energy as well. Along with that, I think using the waste fuel, I think which normally I think Ambuja has been I think pioneered in this area of activity. If they end up successfully, I think creating higher amount of waste fuel usage, it could also further bring down the cost of cement production. And I think in a competitive scenario, when you're expanding the capacity because of the higher demand which is emerging into the economy, if you bring down the cost, then possibility of I think reporting I think larger amount of profits at a faster pace of growth in profit would be very high. So that's where probably I think you find ACC Ambuja combined as a merit. Of course, I think in the shorter run on expectations, I think everything is discounted and probably the stock price would ahead much faster. Maybe it cools down. I think during that correction, in my viewpoint, I think the larger cement companies like ACC Ambuja or for that matter Ultratech would be a good choice to buy into the portfolio for safe position. And some of the smaller companies which are languishing probably I think would be a takeover target. So from that perspective, they would be driven on the news, I think, as and when it happens. So one will look at this sector more favorably than otherwise.
Okay, well, just looking at the options positioning, because today is the weekly options expiry, and the Nifty has, of course, in terms of the numbers that still matter, 17,600 put has seen massive put writing, and it's almost premium down to zero on that one, and 17,700 as well. So it looks like that are the two sort of bands to work with. On the Nifty Bank, it could be very interesting because, you know, we, in terms of the levels where we are close to 40,500 put on the put side is where we have the open interest build up, and 40,700 put as well. These are the two strikes where you have the highest open interest build up. So we will see how things move. The one space which has done well today is chemicals. Tata Chemicals is now in fact one of the top gainers. There's of course some others as well in this space. Devin, any thoughts?
So I think in general, the business condition wise, I think they are looking really favorable. I think to a greater extent, I think the chemical industry is now talking about having a larger amount of play because of the slowdown in the what we call, I think, the energy related issues due to the problems, I think, in Ukraine and Russia, in European region. And I think as a result of which, we are likely to see the higher amount of export push coming in for some of these companies. Of course, I think the companies which are operating the CAMS model and API model, I think they probably have related to much safer role to play, I think, in this kind of a situation. In my viewpoint, I think the companies are available at a corrected valuations. I think they should be looked at. Some of the mid-size or the newer companies which have entered into the market, they're still expensively traded. Any correction in the price would be, I think, a good opportunity. I think we like this particular sector because I think we see the visibility of around 20% kind of a growth in earnings over next 3 years' time on a CAGR basis. So certainly, I think select companies would be interested in buying to add into the portfolio in corrective price.
Okay, Aptus Housing is the other one which is in focus. It's been doing well since the morning. It's a small housing finance company and very low value sort of ticket size in terms of loans that they give out. Citi has initiated coverage and it's doing well on the back of it. 314. Abhishek is here with more details. Abhishek.
Well, Prashant, as you mentioned, Citi has initiated coverage on Aptus Value Housing with a buy recommendation and a target price of 425 per share. They say that it's a highly profitable, affordable housing leader in terms of giving small ticket size loans to affordable housing segment. It has demonstrated quality underwriting as the credit cost has been below 20 basis points pre-COVID, and even during COVID, the peak credit cost was around 86 basis points. So good execution should ensure CAGR on loan front of about 29% between FY22 to 24. Pricing power and efficient cost would structurally help in strong ROAs for the company. So they build a 60 basis point decline in net interest margin over FY22 to 24, given the fact that there will be high share of home loans as well as leverage which will kick in. So they expect an ROA of 7.4% and ROE ROE of 16.5% for FY24. They have said that, core geographies are underpenetrated, which gives scope for growth, as well as the fact that, companies also foraying into new geographies, which will offer growth to them. Back to you.
Okay, Abhishek, thanks a lot for that. Devin, before we let you go, have you tracked this stock or any other in this space?
No, I have not tracked this particular company, but housing finance as a space within the NBFC remains absolutely very, very convincing and attractive. Largely because of the fact that I think we are seeing the credit offtake in the vicinity of around 20% in some of even the larger companies. And this is promising to be on a higher side going forward as well. So from a perspective of, I think, looking at the company from 3 years point of view from now, if you are seeing a 20% kind of a credit offtake, I think on a CAGR basis for next 3 years, definitely you are safe as far as your investment is concerned. Any shock in the market, I think, could protect you on the downside. At the same time, I think most of these NBFCs, some of the larger NBFCs in particular, they've been managing the liability side very well. So as a result of which, I think the spread in normally a priority sector, I think it counts maximum. And a spread, I think, would be probably well protected. All in all put together, given the growth and given the ability on the balance sheet side of some of the larger housing finance companies, I would think that I think they would be in a reasonably good position to deliver the profit performance over next 2 and 3 years' time. So I think one could possibly keep investing into this particular space, I think, in every form.
Devin, thanks a lot for joining us. Good talking to you as always. Let's move on then. We have Mithun Ashwath joining us, Managing Partner at Kiva Advisors. Mithun, hi, good afternoon. Thanks a lot for joining us. Big outperformance for Indian market, and that continues even on day like today. What are you making of it?
Yeah. Hi, good afternoon. I think, India has been quite resilient in the backdrop of, a lot of inflation and volumes on interest rates globally. We've been kind of this market which has stood out, primarily because I think we have a reasonably large domestic economy, and a lot of the sectors which were domestic facing had gone through pressure during COVID, and we're just coming out of COVID, and a lot of these businesses have rebounded quite sharply, especially the discretionary as well as the financial as well as the auto sector. You also have, the open up plays like retail and travel, which have also, rebounded quite smartly. So I think allocations have moved to more domestic-oriented sectors, and that's what kind of helps our market. While, the global-facing sectors obviously have taken a backseat, which includes IT and metals.
All right. Hi, Mithun. Hi, Mithun. Good afternoon. Nigel on this side. Mithun, I think you briefly mentioned IT. The street seems to be shunning it away. It's been the biggest underperformer this year after having a rocking last couple of years. Do you believe the time has come to buy? I mean, in the past, you have said there is value. The last 2 or 3 interactions that we have had. For you now, it must be deep value, right?
Nigel, that's right. I think, honestly, some of the mid-cap IT stocks have not corrected that much. It's been the large-cap, names which you've seen a sharper correction. Some of the niche IT companies on the mid-cap side have stood quite strong even in this market. But we actually do believe some of the other mid-cap stocks, larger mid-cap stocks have also corrected, where, valuations now seem to be quite attractive. They could be, a quarter or two of disappointment. But the runway for these companies, especially on the whole digital and cloud side, is quite large. And I don't think 1 or 2 quarters is going to make this secular story anyway disappear. So I think investors need to be cognizant of that. About a year back, most of these stocks were trading at, 30-40% higher. And most people on the street were bullish then and talking about the secular story. So I don't think the secular story has changed. It is just that the valuations have come and become more realistic. Obviously, you have a backdrop of slowing growth with the Fed raising rates and the concerns in Europe. But I actually think, some of these companies will see through that. We've seen, wage pressure also maybe peak. Even the Fed, which has raised rates, I think, they are also maybe towards the end of their whole rate hiking cycle.
Mithun, you want to name a couple of stocks? You've given us a thesis, and for the last few discussions as well, you've said that yes, you believe that it's the right time to get into IT. Any names that you would like to give us in terms of your preference? Mithun, any IT names you'd like to give us? You're sounding constructive on the sector post this recent correction. Any names could you give us in terms of preference?
If you look at this stocks that which are under coverage, on the large cap side, we are playing companies like TCS. While on the mid cap side, we are monitoring stocks like Persistent Systems. That's one stock which we do think looks interesting.
Mithun, for names like TCS, you said TCS as well, right?
That's right.
Yeah, the point is that the base of revenues and numbers is so large, right? I mean, if you're on the top of the food chain, to do anything very outsized in terms of growth rates becomes harder, isn't it? But the question I'm getting to is, will the same set of stocks, like, the big ones, TCS, Infosys, etc., do well when the cycle turns? Or at least the market looks at the IT sector favorably, or it perhaps will be a newer set?
Prashant, I think, the large cap stocks obviously provide you solidity. They are not going to give you, the 20% CAGR. They would be more the 12 to 15% CAGR type of companies. But when you're getting them at the lower end of the spectrum, I think it is a good opportunity to invest. But I think some of these mid-cap companies that I was talking about could potentially grow earnings maybe 25% over the next 3 or 4 years. Maybe 1 or 2 quarters would be bad. But if you were to look out 3-4 years from now, if these companies could double their revenues, it wouldn't really matter. The 1 or 2 quarter performance would not matter.
All right. Final question then, Mithun. Before we let you go, I believe the stock you're looking at is Eveready. We have a change in the promoter entity. Business could look up from here. Input costs have cooled down for them. I think zinc would be a big component in terms of their raw material cost. You believe at around 330 rupees, the stock is looking up?
Yeah, Nigel. I think, Eveready is one of those stories where, solid brand, they have over 4 million touch points across the country. And with the change in management, I think there's going to be a lot more focus on growing the existing businesses of batteries and Torchlight. And the big business driver will be for lighting. That is an opportunity that they see where they will grow quite aggressively. They're looking to grow the lighting business to about 500 crores over the next 2 to 3 years using the current distribution network that they have. I also do think that the margins may have kind of bottomed at the current levels. And there also you will see sort of, upside. I think this is a good consumer play where, downside is limited because the recent open offer price from, the Berman's was at around 320 rupees. So there's limited downside. And I think this is a good way to play on the consumption side.
All right, we will leave it there today. Mithun, thanks a lot for joining us. The 3 p.m. move is very volatile. It's really both sides moves that you're seeing. The bank Nifty is defending 40,700 and the Nifty is sort of stable around 17,650. So looks like that would be some levels that would be defended. It will be interesting to see if the Nifty can move higher from here. The mid-cap index, of course, is rock solid, still more advances than declines. Let's do one thing. Let's get a snippet of that exclusive chat that we had with JP Morgan Chase Chairman and CEO Jamie Dimon. Let's hear out his thoughts.
There's a lot of turbulence out there. And I was never trying to predict a hurricane. I was simply trying to explain to people that it could be a very modest storm, like it could dissipate quickly, or it could be a hurricane, and that people should be prepared for getting worse because we've never, this war, quantitative tightening, fiscal stimulation, the tension between America and China, these are just very serious things that have, bad economic outcomes.
Well, speaking of bad economic outcomes, are you now penciling in the worst case scenario, given the fact that central bankers have no choice but to continue to tighten? And what we have seen at this point in time is further deterioration as far as Russia and Ukraine is concerned, and further tension between China and the US over Taiwan. Are you now bracing yourself for the worst outcome?
No, I mean, maybe you'll be surprised, but when I said in June, I expected all those things to happen. More inflation, higher rates. I talked about an unpredictable war. Wars are unpredictable. I still think the range of outcomes is a range, and you should look at it. I think a soft landing is probably a very small chance at this point, but mild recession, hard recession, they're all possible. And it's hard for me to give them odds, but they're all kind of possible. And remember, when I say get ready for it, I'm also talking to companies and investors where my real point is we're prepared for it so we can serve our clients. We're going to be serving clients in India regardless of whether it's a hurricane or a mild storm. And that's why I think people should be prepared. I'm much more concerned, by the way, about the humanitarian crisis, the war. These are bad things. Volatile markets we can all deal with. But there are a lot of people who are being hurt by these conditions around the world.
But, let's talk about India, Jamie, and it would have been nice to have you in India. But what's the outlook on India at this point in time, especially given what's happening around us?
Now, look, I think it's very good. Since I've been coming to India, I've seen a nation that's, grown dramatically over time. Like, we have 40,000 people there. It's the second biggest destination for technology for us. So it's very high tech. And so your education systems are excellent. A lot of things. But look, and you've done a lot of I've always said fabulous things like your biometric identification, opening checking accounts, trying to develop your infrastructure better, getting rid of bureaucratic regulatory burdens. It should be the fastest growing nation on the planet for the next 10 years. If you don't, it's because you didn't do all the right things. I think if you do those things, it's very bright. And, you have people like America who want to be your ally and partner in many more ways. And then I think you have a little bit of a gift. This is not, what I'm about to say is not anti-Chinese, but as every nation looks at, and every company looks at supply chains, they're going to have to diversify more. And a lot of people say China isn't as secure a supply chain and therefore have to move manufacturing to somewhere. And I think India could be a huge beneficiary of that. You got to make sure the rules are right, the regulations are right, the capital is treated right. And I talk about rules and regulations, I'm talking about rule of law, bankruptcy law, tax code. If you get those things right, the world is your oyster.
All right, world's your oyster. That's Jamie Dimon, the most powerful banker in the world, on basically macros and how things are looking for India. Not macros so much, but the business environment, which he's very hopeful about. We'll take a very quick break here. There's about 25 minutes to go for close. The market is down about 70 points, 17,649 on the index. Take that break. We are back, and as always, we'll get you a check on what's happening in dealing rooms in our segment, D Street Chatter, and of course, BDST calls as well with our technical experts.
Welcome back. Well, the market seeing another leg down, and this time it's mainly because of the bank nifty, which is now down about 1.4%. 40,626 is what you have on the bank nifty. It's sort of tried to reclaim its support mark of 10-day exponential moving average, has slipped from there once again. The 20-day exponential moving average is 40,200. So let's see if in the due course it has to make a move there. For now, let's go across to Nimesh for D Street Chatter. He's going to tell us what he's picked up from his conversation with dealers. Nimesh, good afternoon. Tell us.
Hi, Anuj. Afternoon. So, in terms of markets, it's been a sharp recovery from the intraday lows. But again, today is not backed by institutional activity, so the volumes are going to be quite muted, is what I understand. In terms of sectors, FMCG continues to hog the limelight. Good amount of buying interest is back, and that's been the trend for the last many days, and that continues in today's trade as well. The other sector which will be important to watch out would be the IT sector. The Accenture numbers will be out today evening. And generally, the Indian IT stocks do react to the Accenture earnings as well as the commentary. So that's something to watch out for. There is a bit of buying back in some of the select IT names of late, and that continues in today's trade as well. Technically, I guess the next level to watch is 17,800 on the upside. If that's taken out, the feedback is you'll see further short covering rally in the Indian markets. The short point is we've recovered sharply from the intraday lows, but today there is lack of institutional support. The volumes are on the lower side by the larger institutions.
All right, Nimesh, what about individual stocks? What are you picking up?
So Nigel, in terms of individual names, the first stock is Tata Chemicals. A big move in that stock on back of very strong volumes. There is a bit of buying interest back. And the other feedback is the management commentary at the Motilal conference was quite strong, and they were quite confident about margins to improve further from here, and hence a bit of uptake in that particular stock into this year. So that's the first one. The second stock is Tilak Nagar Industries, a small stock within the beverage space. Surprisingly, this is one stock where there is a lot of buying interest into this trade by the larger institutions. So the delivery volumes are expected to be quite high in Tilak Nagar today. So that's the second one. The third stock is Piramal Enterprises. Ever since the stock got separated post the demerger of the pharma businesses, that stock has been falling down 10% from those levels. Now, at these levels, there is a bit of interest back in this particular stock. I believe a couple of long-only funds have started, inquiring and buying some small lots of Piramal Enterprises. So that's the third one. And the last stock is Coal India, almost at 52-week highs, a bit under pressure today. And there is a big, chatter and concerns about OFS from government coming very soon, and hence that stock is under pressure today.
Okay, all right, Nimesh, thanks very much for that. So, as always, interesting list, and we'll keep track. There's some news on Lupin, which has got an approval for. Nigel, you want to pronounce it?
Go for it.
Manoj, you want to take a shot?
Diclofenac. That is actually that's the pain relief, sort of a drug. Prashant and Nigel, I think for a long time there was a bit of a debate on whether it should be prescribed or not. It's a slightly strong medicine for pain. I'm saying it because I used to take it when I had chronic migraine. You take it and within 10 minutes you're fine. So that is the
like a magic drug.
Yeah, for pain it is. For pain it is. So that's why you have that. That's the reason.
So that's Lupin for you. Now let's talk about short-term trading ideas. Mitesh is here with a quick short-term buy today, sell tomorrow ideas. Mitesh, hi.
Hi, Prashant. One buy and one sell call. I think Ultratech Cement is closing with weakness. That's an STBT here. Keep starboard about levels of 62.70 and a target of around 61.90 can be looked at. While Asian Paints is something which has shown good strength and is closing with positive bias on the intraday and the short-term charts. VTST here with the stop below 34.15 for targets of 34.60.
Okay, all right. Thanks a lot, Mitesh, for that. Well, Siddharth Bambre, research head of Religare Broking, joins us. Hi, Siddharth. New avatar this time around. Normally we have got you to get your view on the markets and how you read the FNO action. So before we get to stocks, how are you reading the index first? We're at around 17,600. Your view on the index?
Thank you, Nigel. Nigel, we are not negative on this market, and various reasons have been pointed, but the key reason is that we are commanding this great premium. If you look at markets around, there's such a gloom and doom scenario, be it US market, European, or even Chinese market, where there is a burst in housing bubble, and here we are talking about growth in housing space, infra space. We are seeing, inflows. Yes, there is some sort of confusion among foreign participants whether to buy or sell, and that can be seen on the data on regular basis. But in larger scheme of things, when we look back, say after a year or two, we will say that this 1 year, that is from October 2021 till date, it has been more of a consolidation in our markets when globally all other markets were correcting. So we are not negative. Yes, interest rates are rising across the globe, which would impact interest rate sensitive sectors. But overall, we are in a comfort space, and more allocation would happen towards India, which would keep this market, getting buying support at lower levels. So our recommendations and our advice to both from short as well as long-term perspective to our clients is not to be negative. and hold on to your exposure in equity. Maybe there is a time for change in sectoral allocation after the significant run-up which we have seen, but one has to be invested in equity.
One has to be invested in equities. By the way, the USD INR future is already at 80, 85. Forget about 80, 81 is at risk. It's been that kind of a market. Siddharth, good afternoon. In terms of individual stock ideas, what would be any new idea that you've looked at?
Yeah. So, well, we are tracking more of ideas which are already tracked by market participants, but then Anuj, timing those ideas is of paramount importance. So, I have 3 stocks to discuss today. We are liking Dalmia Bharat Cement from cement space. We are also liking HCL Tech in IT. Though we are, our stance is that probably the underperformance of IT is more or less over. And I'll also talk on Metropolis, taking a contra call here compared to some of the market participants who have a sell recommendation. So let me start with Dalmia Bharat here. So yes, cement space is buzzing. Let's understand the fact that there is growth in housing space, infra space in our country, though others are still struggling. And what other factor which is fueling our sentiments to be positive on this space, and especially Dalmia Bharat, is that 25 to 30% of total cost is fuel cost, and now we are seeing pet coke prices, coal prices, fuel prices are coming down, which will aid this sector in an environment where the demand is quite vibrant. Even talks of Adani Group coming into this space would lead to a lot of competition. Mind you, there is a huge difference between a service industry and a manufacturing industry, and the kind of price wars which we see in service industry cannot be done in especially core manufacturing industry. So all these fears of Adani Group coming and spoiling the sector, I feel that is quite far-fetched. Coming to stock, I think this stock has been doing pretty well. It's fourth largest company. They have very aggressive plans. They are talking about tripling their capacity in next 8-9 years, and they're also planning to go green and have more of renewable power, which reduces and gives synergies in terms of operational efficiencies. Even if you look at valuation parameter wise, EV to EBITDA per se, the stock is trading at 8.4 times, and we have a target multiple of EV to EBITDA of 10. Which gives around 1950 as a target price for Dalmia Bharat. So we are suggesting Dalmia Bharat in cement space and avoiding frontline names. The other space is IT. Now this is again a contra with Anuj. What we have seen is that IT, Nifty IT has corrected since Jan 2022, 31%. Nifty has corrected around 4 to 5%. So there is an underperformance of 26-27%.
Oopsie. So I think the ideas that were mentioned were Dalmia, you had HCL Tech and Metropolis, all 3 of them. Sid, we lost you for a bit. You're back with us. Go ahead. Sid? Nope, I don't think that's...
can you hear me?
Yeah, no, you're back with us, Sid. Yeah, go ahead. You were making your point about the stocks.
So I was talking about IT space, Nigel. There is a strong degree of underperformance which has happened. Now, my statistical observations, Manoj has been highlighting that how there is a possibility that the IT may stop underperforming. Now, it's very important to see we are not talking about absolute returns. We are talking about the underperformance getting over, say, in next 4-5% of correction in IT, which means that if Nifty corrects 5%, IT may also correct 5%, or eventually IT might start outperforming Nifty over a period of time. And we are talking here multi-year period. So maybe, more 4-5% down and IT would become quite attractive. HCL Tech is the name which I want to discuss here, Nigel. One of the cheapest name. We have HCL Tech and Infosys in our coverage. So I'll talk about HCL Tech. A growth of around, say 15% over FY23 and FY24 multiple, which we are assigning is around 14 times. It's a decent attractive buy with decent upside from current levels. So that is a contra buy. It's trading around 900. I would suggest buy on dips in HCL Tech maybe till 850, and it's an attractive buy from long-term perspective. And very quickly, I want to talk about Metropolis. I understand Street is not very optimistic in this space. But then the degrowth in last quarter or fall in margins is mainly because you have seen phenomenal rise in both the aspects in last 2 years, which were COVID driven. So expecting same kind of growth and margins to be when COVID subsides, I think that was too optimistic assumption by market participants. Even the concern of competition again foraying here is again too far-fetched, because if you look at the mix of revenue for Metropolis, 49% of revenues are coming from specialized checkups, which are not price sensitive and are driven by only if someone has chronic disorders. So I believe market is pricing too much of negativity in this stock. It is already available at a price which was available at pre-pandemic, and you have seen almost 50% rise, 100% rise in profitability, 50-60% rise or 80% rise in top line. Even if you don't consider any growth in FY23 and a modest growth in 24, I think this stock is quite attractive at this point of time, and we are suggesting our clients to buy. We have aggressive target prices, but I think 1800, 1900 is on cards on this one.
Okay, all right, got that. Sid, hold on. For the time being, we'll have to slip in a short break. Before we do that, though, just take a look at the intraday chart of India Cement. A couple of days ago, I was just making this point. It can be very tricky because some of these stocks have run up big time. Now, the hope is that there will be some kind of announcement that will come on, on stocks like India Cement, Sanghi Industries, Nuvoco. India Cement, all of a sudden, it's fallen off the cliff. That's a 6-7% cut in the last 30 minutes or so. You have Sanghi Industries that are at the low point of the day as well, and Nuvoco as well is seeing some bit of selling pressure. If you pull up a 1 month, 1 month chart of India Cements in the mid-cap index, you'll see it's been a big outperformer. But it's playing a bit of catch-up now on the down, so just take a look at that. Big outperformance coming from India Cement. Some profit-taking is what we're seeing on that counter. For the time being, slip in a short break, come back. Final 10 minutes of market close.
All right, I think we'll end with about a 80-90 odd point cut, unless, of course, something dramatically moves in the last now 6 minutes, which are left for trade. The big story, or at least the big move in stock today, has been in Fortis. The Supreme Court extended the stay on the long-awaited open offer to Fortis Healthcare shareholders by IHH. The move dashes hopes and dents the stock big time. Ekta is standing by, and she's going to tell us what has happened so far, because, it's a story which has been on for the last 3-4 years, and what from here. Ekta, over to you.
Well, the news of a stay on the open offer and a possible forensic audit is a setback for Fortis shareholders. First, a quick background of the deal that took place in 2018. The twists and turns for the Fortis sale began when the promoter-appointed Fortis board entered into a deal with TPG Manipal in March of 2018, after which they agreed to consider unsolicited bids, which eventually resulted in the board opting for the Sunil Munjal Berman bid in May of 2018. The institutional investors were unhappy with the promoter-led board, eventually reconstituted the Fortis board and decided to begin a fresh bidding process. In what was a highly publicized and, might I say, scrutinized bidding process, IHH's 4,000 crore bid was chosen over TPG Manipal by the board, taking into account recommendations from financial advisors Standard Chartered, Upward Capital, and legal advisors from Luthra & Luthra and Cyril Amarchand Mangaldas. The 26% open offer was triggered by IHH after they infused 4,000 crores via a preferential allotment in Fortis for 31% stake. The 3,350 crore open offer put on hold 4 days before it was expected to begin on a plea moved by Daiichi Sankyo. The delay in the open offer has thrown up a few questions, such as what does this mean for IHH? The Malaysian conglomerate, despite the delay in the open offer, according to the Fortis management, has been committed to Fortis. However, analysts point out concerns over a forensic audit and uncertainty over the open offer might make them look at the Fortis stock as a possible M&A candidate. The other question question is the shareholders. They've seen a delay in the open offer since close to 4 years. SEBI too had urged the courts in 2020 to allow the open offer to go ahead. Experts, however, point out that yes, while it is right for shareholders, the open offer has to be put into context. In this case, with the validity of the deal in question, the open offer doesn't take precedence. Lastly, what about the Fortis stock and overall operations? While the stock has corrected today, it has given returns of over 90% when comparing the open offer price of 170 rupees and the 52-week high the stock was sitting at just last week. In terms of performance as well, the Fortis chain with over 30 medical facilities recorded a growth in both revenue and EBITDA since the IHH takeover, with Q1 FY23 seeing one of the best quarters for the hospital business. While Fortis has said they are seeking legal advice to decide the future course of action, going forward, the street will closely watch factors such as the forensic audit, the hospital sustaining their performance, IHH's commitment when it comes to expansion plans, and pending deals such as SRL Diagnostics, PE firms exiting, and lastly, Fortis possibly being an M&A candidate.
Ekta, thank you very much for that. You know, that last bit is the really interesting one, isn't it? Will IHH, and have you picked up anything, Ekta, on this in terms of whether, IHH may actually sort of put this on the block now? I think the 30+% that they own already.
Well, I have been speaking to a couple of people who are close to the deal. You know, the management, the Fortis management themselves have said that that IHH is completely committed. And the thing is that IHH is exiting some operations globally as well. That's what experts have told me. Hence, India becomes a very important piece of the puzzle on a larger scale for IHH. So it might not be so easy for them to exit. But remember, they are a larger conglomerate. They have operations across the globe. So dealing with these kind of uncertainties as they have since 2018 might not bode well for them in the future. Hence, there could be a consideration of maybe a larger player coming through and buying that 30%
Ekta,
stake.
thanks a lot for that. Let's now start wrapping up the market action for the day. And it's a term we have used often actually in the last 1 month or so, down but not out. And today was one such day. Yes, the Nifty was down 84 points, but 84 points, 0.5% is really par for the course. Any other day you could have been down 84. On a day when global market collapsed, it was really resilient. In fact, the bank Nifty was down 1.4%, so that's where you had some pressure, but the mid-cap index is actually ending in the green and more advancing than declining stocks. In terms of index stocks, well, the big pressure came from banks and financials. So HDFC Bank, HDFC, Axis, ICICI, Kotak, and Reliance, of course, putting in some pressure along with Infosys. On the way up, you had FMCG once again, Titan, Lever, Asian Paints, ITC, Britannia. I mean, this really has been phenomenal space to be over the last few weeks or so. Broader market was strong, Prashant.
Broader market was pretty strong, Anuj, and it stayed strong for bulk of the session. Let me just quickly outline what happened. So market breadth actually was about more or less, 1:1. But KPIT, of course, we highlighted that 12% higher. Adani Wilmar is up another 5%. Tata Chemicals was up 5.5%. Borosil Renewables was up 5.5%. Campus, the footwear stocks have all gone wild this week, 5%. Newland Laboratories 15%. Saxoft 12%. CAMS was up 5%, and so on and so forth. So lots of action backed by lots of volumes. Nigel.
Well, there's hope that finally we'll be seeing the new airport here in Mumbai, at Navi Mumbai. So you had stocks like Jaycorp that were up and about. You had Reliance, Indus Infra as well that was up close to around 2.5%. Both of them did pretty well. Suzlon, there's going to be a rights issue meeting on Sunday night. In fact, that news came in late last evening, and that stock was up close to around 14% in trade. KPIT was doing well, but Tata Elxsi, the one that's more expensive, well, that stock as well did see some bit of traction in trade. SP Apparel, we had the management who was talking about a 15 to around 20% revenue growth with margins at around 18%. They say that they're catering to the kids section. So demand's really not going to get impacted in that space. And also Gokuldas Exports. Brokerage quite confident on that particular name. And that one as well was up close to around 5.5% or thereabouts. So to wind things down, the Indian markets outperformed yet again. We ended in the red, but in fact we pulled back and we were big outperformers in comparison to the globe. The real strength was seen in the mid-cap index, with the index ending high with a gain of around 0.3% and more advancing stocks than declining stocks. Well, that gives you a sense of the strength that we've seen in our own markets. Well, on that note, though, we'll have to wrap up on this edition of Closing Bell, but you stay with us here at CNBC TV18. Lots lined up on our Thursday special offering. Big deal.